Hi everyone, and welcome to the August Property Market Update event. My name is Karen and I work in the marketing team at ESPC. I have three other ladies on the call with me today. Firstly, you'll be meeting Ash, who is from ESPC as well, and she'll be giving us a market update. Don't worry if you don't get all the stats from Ash noted down. We're going to send you a wee link to everything after the event. And also with me from ESPC Mortgages is Shirley. And from
Hey there.
Thorntons, we have Catherine, and they will both be answering your questions today that you have submitted before we start the webinar. If you have any questions, there's a wee Q&A box on the bottom, so just fire any into there and we can try and get through them if possible today. But don't worry, if you can't get your question answered, just send us an email after. I'll go over this all at the end and we can link you up with someone who can help. So to get started, let's go with Ash, who is going to give us a wee property market update.
Thank you so much, Karen. Hi, everyone. My name's Ash. And today I'm just going to give you a little bit of a property market update on what's been happening in the property market over the last quarter. So we're going to cover the areas of Edinburgh, the Lothians, Fife, and also the borders. We're going to have a look at some different data today. So it's going to cover things such as properties coming to market, sales volumes, selling times, so how fast properties are selling for, and also the price achieved over Home Report as well. So just before we continue, these are all averages. If you do want to find out any further information, please speak to your solicitor, or you can come to us for further breakdown of different areas and properties. We'd be more than happy to help you with that as well. So I think what we can say safely is it's been another really busy quarter in the property market. I'm sure that Catherine and also Shirley will agree with that too. What we've seen is demand is continuing to outstrip supply. So there's been a really high level of demand from both buyers and sellers, and we're seeing homes are selling for faster. We're noticing that on average over Home Report valuation, that's kind of holding up quite steady. But what we are seeing as well is there's been an increased interest in surrounding commuter towns. So a lot of people are starting to look out with Edinburgh city centre for more space in their home as well. And gardens. I think everyone's looking for a garden now, aren't they? So first of all, I thought I'd kick off with some selling prices. So in terms of selling prices, if we look at last quarter from May to July, Edinburgh, the Lothians, Fife and the borders, we've seen a continued upward trend as buyers are still looking to secure homes. So the average selling price rose to £275,000, which is up by 7.6% year on year. And that's across all those areas as an average. We witnessed the biggest increases in selling price in East Fife, so that actually rose up to 268,000, and also West Lothian, which rose to 241,000 as well. And again, those areas are really popular with commuters and people trying to travel back into Edinburgh as well. When we look at Edinburgh in terms of average selling prices, we notice a massive growth in some areas. However, properties in the city centre have actually continued to decline, which is quite interesting. And that's been by 5.4%. And that's bringing the average selling price to £362,000 year on year. Again, all properties definitely vary. So if you do want to find out a little bit more information, it is wise just to speak to your solicitor on that one as well. So in terms of new listings coming to the property market across Edinburgh, Lothians, Fife and the borders, again, we have just seen high levels of activity from both buyers and sellers. New property listings from May to July were actually up by 61.5% year on year. And current trends show that there's no sign of that slowing down at the moment. We've seen a higher volume of lower priced properties come into the market as well, and that might be a factor in that increase. But we also remember that last year, during that time, there was still an impact of the lockdown restrictions, which obviously shows why there's been such an increase in activity. If we compare it back to 2019, so to give us a bit of a more average view, because last year was a bit crazy, we've also saw that the properties have still decreased ever so slightly. So from 2021 compared to 2019, we have still seen a slight increase this year, a decrease this year. We saw Leith and Dunfermline had the most properties listed for sale, which is perfect for any first-time buyers who are listening as well. If we're looking at the property sales for the same areas across that same time frame, we saw an increase of 234% year on year. I think that figure's extra crazy because last year we still saw those lockdown restrictions were in place much of May through to July. So if we compare that to 2019 to give us a more kind of balanced overview of that, there's been an increase ever so slightly in sales of 10.6%. So Leith had the largest volume of property sales coming on, and that had a 219% increase in 2-bedroom flats sold versus 2020. And then if we look at selling times, again, in that same time period from May to July, we know that the market is just, increasingly competitive. The median time to sell is 14 days. So that's 2 weeks. And that's actually 8 days faster than it was last year, which is incredible. The Borders actually witnessed the biggest shift in time to sell. They were sitting at 75 days, in 2020. And it's now down to 16 days, which is absolutely phenomenal. So again, it just reiterates how many people are maybe looking to start looking out in different suburban areas as well. Edinburgh continues to be really diverse in terms of time to sell. The city centre is actually taking 9 days longer than it was compared to last year. And we had roughly about 34% of properties that moved to a closing date. So in terms of buyers and the home report valuations and how much things are going above home report value, again, demand is definitely still outstripping supply. We're seeing properties on average achieve 105.3% of home report valuation. So that's on average across all those areas, but that's still 2.3% more points than it was in 2020. Again, some of those figures will be skewed by different areas. Please just speak to your solicitor. I'm sure Catherine will reiterate this as well. Every property is so different. So it's good to do a little bit more research in the areas and types of properties that you're looking at. We saw East Lothian was the most competitive, and we saw a slight decline in terms of Edinburgh, notably more for flats. And this might just be due to this kind of demand, again, for houses, people looking to try and move out with Edinburgh and get an actual house with maybe a back garden. And we saw the volumes of properties on the market. So yeah, I think that all in all, it's still been a very, very busy quarter. And if you do need any more information in terms of the stats, please just let us know. We also have the house price report, which is on espc.com. You can get a lot more information on there as well. But as Karen said, if you have any more inquiries about figures, please just get in touch. And I'll pass you over back to Karen, who's going to do some questions.
Yep, and we'll make sure that we get all of that information to you in a follow-up email. So let's get started on the Q&A. Thank you so much to everyone who submitted a question beforehand. We divided them up between Shirley and Catherine. Also, some questions were a bit similar, so we've kind of grouped them together, but we will try and get through as much of the content as possible. And like I said, if there's anything that we've not answered or you want us to elaborate on, just pop it into the question and answer box and we'll try and do that today for you. So first up, the question for Shirley is, what schemes are currently available to help first-time buyers?
Hi there, everyone. Thanks, Karen. Yeah, well, I suppose on the downside, unfortunately, the first-time buyer scheme that had the widest criteria and it was open to a range of incomes and property types was the First Home Fund. This gave you up to 25,000 in the form of an equity loan towards your deposit. However, this opened up in April of this year, and within days, unfortunately, the money was used up and so is no longer available. However, in terms of schemes that are available, the Help to Buy Small Developers scheme is open until the end of March 2022. Emphasis here on small developers. Obviously, there had been a much wider Help to Buy scheme available. It is purely small developers. This is for properties up to £200,000. You will need a 5% deposit, and the Scottish Government can help with 15% in the form of an equity agreement, and the rest is made up with a mortgage. Criteria on income does apply in that you would need to be able to afford, you have to prove that you can't afford the full amount. However, you are able to afford the portion of the borrowing that you are taking out. Link Association administer the scheme, and there's a list of small developers that are taking part on their website. There's also the LIFT scheme, the Low Cost Initiative for First Time Buyers. It is obviously for first-time buyers, but also priority access groups, people 60 and over, social renters, disabled members of the armed forces, veterans who have left within the last 2 years, widows, widowers, and you need at least a 5% deposit on this, but you pay between 60 and 80% of the home's cost, with the Scottish Government holding the remaining share. Like the Help to Buy scheme, you need to fall within that middle ground, being able to prove that you wouldn't be able to afford the full amount of the property, however, being able to afford the share that you do take on. There's also additional criteria on this scheme in terms of price thresholds, depending on area and property size.
Okay, thank you so much, Shirley. That was really in-depth. Catherine, I've got the next question for you, please. Are flats in Edinburgh becoming less popular?
Thanks, Karen. I would say not. It depends on the property. To give you an example, just this morning, I did 3 offers. 2 of them were flats in Edinburgh. I'd still say the bulk of properties that I'm offering on are flats in Edinburgh. Some properties that might be more suited to the likes of the second property or sort of buy-to-let or Airbnb market are slightly less popular, I'd say, at the moment. There's a number of factors for that. I think COVID's got a big part to play in that, with just not having quite such the influx of foreign tourism that we've seen in previous years. And hopefully, as things begin to open up, we'll see, those sort of properties begin to kind of take off again. Also, the additional dwelling tax has put some people off, buying second properties or adding to their existing portfolios just because it's cost prohibitive. But certainly from my point of view, I'm not seeing a slowdown in terms of people wanting to buy flats in Edinburgh. As I say, it depends on the property, but majority of people still want to buy flats in Edinburgh. So I think hopefully as things open up, as I say, we'll see, the properties that are more suited to the kind of Airbnb market, come back to the fore again as well.
Perfect. Thank you so much. Shirley, the next one's for you. Are 5% deposit mortgages widely available now?
Well, yeah, the good news here is that 95% loan to value mortgages have come back to the market. These did disappear during the COVID lockdown, and indeed so did the majority of 90% loan to value mortgages, and indeed 85% started to disappear as well. The consequence of this had been an increase in the interest rates on these higher loan to value products. However, now with the return of 90 and 95%, we are actually starting to see the lenders starting to jostle for the business again and get more competitive. So indeed, products are generally changing on a daily basis, which is great news. I would try and encourage a larger deposit, as there's less risk to you as a purchaser, but also to the lender. And as such, the lower your loan to value, i.e. the greater your deposit, the better deal that you get. And these work in 5% tranches, so 95, 90, 85, generally speaking. However, I do appreciate that a larger deposit isn't always possible.
Thank you so much. And Catherine, the next one for you. This is from one of the listeners. I'm trying to buy a house on the outskirts of Edinburgh, but keep missing out. What advice would you give to secure a property?
Thanks, Karen. There's no quick answer or easy answer to that. It's very difficult in terms of supply and demand, as Ash alluded to earlier, because properties that are going on are coming off very quickly and things are very competitive, particularly looking on the outskirts of Edinburgh with people wanting to sort of move further out of the city to get gardens and more space. There's not really a kind of easy trick to it. All I would say is, try to get in there quickly. You might be lucky enough to secure a property before it goes to a closing date, or get in there before somebody else manages to make an offer. Not always the case, as some sellers may say, well, I've just had my property on for 2 days and I want to see what happens over the next week and generate more interest. If a property does go to a closing date, then usually what I say to clients there is just to put in your best possible offer. And if you don't get it, you can walk away knowing that it wasn't meant to be. Sometimes a good trick for a closing date is to put a slightly unusual figure. A lot of people think in rounded numbers and think, well, I'll just give 10% over value. Sometimes it's worth adding an extra £20 or £100, or I've had clients who got their children to pick the numbers, or they added 99 pence onto the figure, just to make it slightly unusual and to stand out from the rest of the offers that come in at closing dates. You might be lucky enough to get it by the £20 or £100, or the seller might like the quirky figure that you've come up with. The top offer is not always the successful. I've had clients who were top at a closing date, but the seller decided to go with the third offer because they liked the people. So sometimes if you can get a good rapport, with the seller, if you get the opportunity to meet them, then that's also a way that you might be able to start a dialogue directly with them to agree an offer on a property. But I think the quickest answer to your question is keep trying. You will find a property eventually. It's just a very competitive market, but you will find something eventually.
Perfect. And I have another question for you, Catherine, as well. Is now a good time to sell?
Yes, for the reasons I think we've said, is just there's a huge demand for people looking for properties, and there's just not enough properties to meet the demand. So anything that is going to market is selling quickly and selling, generally well over valuation. So yes, it's definitely a good time to sell. The only thing to keep in mind is if you are looking to put your property in the market, it's maybe not so easy to find a property to move to, depending on your circumstances. But certainly definitely a good time to sell. And if you're able to rent or stay with family in between properties, then it might take the pressure off in terms of finding a property to move to. But certainly, yes, I'd say now is a very good time to be selling.
That's great. And Shirley, one for you, again from one of the attendees today. I'm a first-time buyer and I'm interested in getting a project property, but can I get a mortgage that'll include the renovation costs?
Oh, okay. So just to explain a little bit about lenders and mortgages, lenders provide mortgages at relatively low cost because they can offset the risk against the security of your property. So that's why you see when we've obviously just talked about 95% loan to value mortgages having higher interest rates, because that 5% is all the lenders got to play with in terms of equity. So they're also meant for long-term borrowing. So generally mortgages are for you to live in for, the remainder of your life, or certainly that's the intent, a long period of time. So there has to be equity within your property. And for mainstream lenders, this also means that it has to be in a mortgageable state. So a functioning kitchen and bathroom, and generally in a good state of repair. So if you get a home report on a property, you will actually see there's a mortgage valuation portion of that will say, is it suitable for lending purposes? And that's the reason why. So if your property project is cosmetic, i.e. a bit of decoration, I would recommend actually holding back some of your deposit to pay for that. If the project is more in the way of renovation and you need to release equity as you work on the property and improve it, This is more specialist. Mainstream lenders don't want the risk of having a half-finished project as a security. So as such, specialist lenders generally come with higher interest rates on these renovation type mortgages, and also higher fees. And prepare yourself. These, have your quotes from builders or any other tradesman ready, your cash flow and cost plans in place. It can be quite a onerous task.
Thank you. Thanks so much. Catherine, the next two are for you. Firstly, how is the market going to perform for the rest of 2021?
If I had my crystal ball, I would be happy to answer that question. I think that the market's going to continue much as we are for a while to come yet. I think we're still going to see people looking to adjust their work-life balance as we see people working from home more than they did before. So that will continue to drive the demand for people, moving out to commuter zones or bigger properties with gardens, or just having, more space and more outside space, or, more home working space as well. I think we will, however, see some kind of readjustment as offices start to open up and people return to the office. So I think, there will be people, who, there will be a readjustment along those lines. I think interest rates for borrowing is still low, so it's easy, generally speaking, for people to get mortgages. I do think that we will see a change possibly kind of into next year. There's talk of interest rates going up possibly as early as the middle of next year. I don't see house prices going up indefinitely. I think that as we start to see the full impacts of COVID, I think probably at the moment we've not really seen it in terms of paying for it, if you want for a better word, because furlough scheme's still ongoing, but will come to an end very soon. And I think businesses will be reassessing how they work going forward. Maybe they don't need so many staff if they don't need a big office anymore. So I think that will have an impact on the property market as the impact of COVID really hits home and we start having to kind of pay that back. So I think things will slow down. But I do think that the demand is still there. And as I say, people are now reassessing their work-life balance. So I think there's still going to continue to be demand, but I think perhaps outside factors, more the economy, might ultimately have an impact. It is a difficult market for first-time buyers. They're quite often being priced out of the market just now. So I think that we'll see the bank of mum and dad helping out more and more, or certainly helping put down larger deposits to help secure properties. But I do think that the current kind of boom that we're seeing just now is going to continue for a while yet. But I think probably into next year it'll slow down.
Perfect, thank you so much. And the second question for you: how much over home report value should I expect to pay on a property?
It's a difficult question to answer because every property is different. In some cases, we're seeing 10 to 12%, but it very much depends on the property and the location of the property. So a good way of kind of judging how much to sort of to pay is to obviously take advice from your solicitor, but also find out if there's notes of interest, how much interest. If there's only you and one other party, then you may not have to go quite so high over valuation. But if it's you and 16 notes of interest, then obviously it's a popular property and will go considerably over the valuation. So they can help kind of judge where to pitch your offer, but it really depends on the individual property and the location of that property. So obviously can vary, but your solicitor would be able to help kind of point you in the right direction as to where to go with your offer.
Thank you. And that's all of our pre-submitted questions. We've got one in the Q&A box that we'll have time to answer just before we go, and it was touching on something that Shirley mentioned earlier, so if you could help with this question, that would be great. So Shirley, what is the success rate for buyers using the lift scheme with the market being so buoyant?
Oh, I certainly don't have any stats on that. I actually thought you were going to say the 95% because 95% certainly has very stringent credit scoring. So we have seen, you do have to be, dare I say, squeaky clean for that. Yeah, it's maybe a question for Link as an association that administer the scheme there. Sorry, I don't have any sort of statistics on that. Apologies.
That's fine. What we can do is we can take that question and then get back to you on it via email, which we're happy to do if there's any other questions that come in that you feel like you would like answered. So if that's everything, I would just like to say thank you so much to everyone who has attended and of course submitted the questions prior and during the event here. But like I said, if you do have any other questions that you would like answered, please just email it to me at marketing. So the email address is marketing@espc.com and I can forward it to the relevant person. And I'm sure we have someone who's more than happy to help. Do keep an eye on our next event. We have a buy to let event webinar happening on September the 1st. So we'll be promoting that over our social media. So if you would like to come along to that, just do as what you've done before and sign up to the event. And if that is everything, that is the end of the webinar. Thank you so much. And of course, thank you to the panelists for your help today.
Thank you.
Thank you.